Okay, so we'll continue. So in the previous section, we had studied about asset 710. Okay, so before we proceed, we'll have one quick recap. Yeah, because I want to give an analogy because that wordings and all were a bit confusing there. Anyhow, there were only two questions. See, when we talk about the comparative 710, okay, so we are talking about the comparative. Comparative will take two forms: corresponding figure, comparative financial statement. Now, for both, what is your audit procedure? How do you verify? I will give an analogy, students. The analogy will be something like this. Like, this is your 10th marks card. 10th marks card. And now you are trying to enter into CA course. Now, CA requires you to score minimum 50% in the 10th. Followed, no? Now, there can be a possibility that, okay, first of all, if you have scored minimum 50%, then should we discuss anything about your previous thing, comparative? No, I need not quote anything there because you have already scored 50%, that's done. The problem comes when you have actually scored say 40%. And this is not an eligibility. That is a problem, no, it's a misstatement. But due to print mistake or something, you must have got 55% or 60%. Now, this is a case where there's a problem in the last year. You got my point? Now we have to be careful because if there was no problem in the last year, then the standard says you need not talk about last year only. You just give express opinion on the current year. Because last year figures were correct. Why you are bothering about the 10th performance and all? Why you want to go into show something like, see, students also can manipulate, no? Instead of say, previously they used to say 98% and their performance comes to 60%. Oh, parents may think, what happened? 98% you are scoring in CA, what happened? So what I'll do, I will show 58%. 58% to 60% looks good, but 98% to 60% looks bad. So in this context, I'm just trying to tell you, somebody can manipulate. So our job is to go and check that last, when somebody has come to us, our job is to go and check that previous financial statement, okay, to have a proper comparison. Now, how to verify the previous year financials, okay, how to perform the audit procedure. See, in the chart, no, they have given 5 procedures. You can write that in the examination. First, you need to check the previous year figures. That means you have to manually tick, okay, this is this. You take the mask card and you tick, no, like that. This is my balance of this year. And in the comparative, this is my last year's financial. So I will go and tick one by one, one by one. Second, I need to assess the consistency of the policy. Same policy I should have followed. Third, I should have seen the proper classification has happened. That means no regroup. My total profit is same, but the revenue items, expense items could have been regrouped. Classification could have changed. Then I need to look, is there any misstatement? I need to check last year was there any misstatement like this print mistake? And fifth one, take a written representation. So instead of what points they have given, no specific procedure, evaluating the impact, written representation, you can take this 5. I have updated this PDF. I have shared you just now. You can take it. Okay, now comes the catch, the reporting. Okay, so we will do one reporting like this. See, we are talking about the corresponding figure last year. So there can be two possibilities that last year you have secured say more than 50%. Last year you have secured less than 50%. But you are not told it is less than 50%. So if you have secured more than 50%, that means there is no misstatement. Then do not refer. Clean. If there is no misstatement, you do not refer. The problem comes only when there is a misstatement in the last year. Now, when you talk about the material misstatements happened last year, there can be two possibilities. The auditor was aware or auditor was not aware. Who? The previous auditor. This can be the two scenarios which could arise. If the auditor was aware, then what you will do? He will end up doing modified opinion. If he was not aware, then who found out? You found out that actually his percentage was 40, but in the mask card it came as 55%. Who found out? You found out. So what you should do? You have to modify now. You have to refer. This is what this point says. The point number, if you have figured out the misstatement in the previous period. So I have modified it. You can refer what they have given in the box. You need not talk. Okay, so I had updated somewhere. Okay, I think, yeah, this is the other one I have given you. You can check this prior period misstatement, which is not addressed. You can talk about this point. Oh, I'm sorry. Okay, so you have to refer. Like if the last year modification was done, first question comes, is it been resolved? Have you resolved it? If it is not resolved, okay, they can be resolved or not resolved. If it has been resolved, that means this student went back again and corrected the 10th marks card and made it 40%. Then there is no issue, no reference. Don't refer now. Why you are talking about the previous one? We will not get into CA only. But the real problem comes if that matter has been not resolved. So there can be two scenarios where it is material. If it is material, okay, a student has come to you who has actually scored 40% in 10th. He needs a chartered accountant certification now to get entry into CA. So CA will see that there is a problem because it should have been 40%, but in the marks card it has come 55%. Is it material? It is definitely material. Did you resolve it? Not resolve? Then you modify your report and tell why. Because of the last year. Exactly same thing happened. Like last year capitalization was wrong. Is that material today, this year? Yes, because this year also my closing balance has changed. So I have to modify plus give the reference to the last year. Now, what if it is not material? Okay, what is the scenario? Like, for example, he had actually scored 50%, 55%, but in the print mistake happened and it came 85%. Okay, now it is not material because what was the minimum cutoff he should have scored to get entry into CA? 50%. In reality, he has actually scored 55%. So now what you do? You don't do anything. But you have to tell that there is a problem in the 10th marks card, but it's not material. So wrong capitalization he has done last year. Like if I show you, 50 crore was wrong capitalization. But this year, okay, the amount was, there is a substantial increase in the production and all, and the asset value became 1000 crores. So in the 1000 crores, the 50 is immaterial today. So when it is immaterial, I have to just modify only comparative. I should just tell that, Baba, when you are comparing, please see that last year figure has been modified. There is a problem with the last year. That's it. I hope students it is much more clear now. You have understood it, this concept. Yeah, because morning I felt like with the confusion was there. Yes. So then we move to the second chapter, SL7, and say other comparative financial statement is not a big deal. You can write the standard points. Now, annual reports we were talking, because when your financial statement and the annual report are combined together, because your financial statement is sitting in an annual report. In annual report, there will be other information also. Okay, so many other information, and if there is any inconsistency, it will undermine your credibility. So your objective is to consider, read that other information, and is there any inconsistency between that information and the financial statement, that information and your understanding, and if you have identified any inconsistency or material misstatement, you have to respond appropriately and report it. Okay. Now, what are the requirements? The first requirement is to obtain that other information. So what happens? The process goes like this: 31st March, the year ends. Say 10th of June, you finalize everything. Okay, everything is finalized. Then you have got the board of directors meeting on say 12th of June. Within 2 hours, auditor will sign the financials. Done. And then say it may take around 10 days. Then you start giving the notice to the investors, you print the annual report, and then you send. This is the process. Then maybe on the 18th or 20th of June, you will be dispatching the annual report printouts. So now you see, students, now my audit report is already issued. Understand here. On 12th of June and 20th June, the annual report will go. So then how do you do it? That's why always you need to obtain one draft version. Because management must be knowing what they are going to tell in the board of directors report, sorry, in their annual report. So they have to ask the management, give me one draft, I will go through the draft. So first you need to determine which all documents comprise annual report. and when they are going to issue. So first you need to make an inquiry with the management. Sir, tell me, annual report comprises of what? What all things you plan to include in there? When you are going to send? What is your timelines? Then make an arrangement to obtain the final version of the documents comprising the annual report. So okay, what can happen now? Some portion you may receive before, thing will get finalized only after. Whatever. So you need to tell the management, sir, before you dispatch to the investors, you need to show me the final version and you should get my approval, because I have got SA 720 which wants me to go through your annual report. Then take a written representation from the management for the final version of the document will be provided, because they have to give agreement in writing, agree in writing that, sir, before we dispatch the investors on 20th of April, we will give you the final version, then only we will dispatch. Take that representation. That's it. This is what you need to do with regard to obtain the information. Okay, so either you would have got the information or you would have got the representation. Then what to do? If you have got the information, you have to read the content and consider the other information. That means you have to carefully read from page number 1 every information, and any component or contents you come across where they have told something related to the financial statement, just go and cross verify that number whether it is matching or not. Somewhere they told revenue, go to your P&L and say whether that revenue and annual report revenue is correct. Somewhere they said their return on investment some 20%. You figure out how they calculated and just take the financial statement, you only calculate the return on investment and is it 20%. So you have to read and consider, is there any inconsistency between other information and the financial statement? One by one you have to go. Then consider, is there any material inconsistency between other information and auditor's knowledge? Like for example, they have presented one pie chart and they said segment, they have got 3 segments. Segment, okay, no, they have got 3 segments. This is segment A, segment B and segment C. So segment C is 60%. Oh, this is the new information, because as per your understanding, you thought segment A is 60%. And suddenly you realize that segment C is 60%. Now there is a problem, because either the annual report is wrong or your understanding was wrong. Because if the annual report was wrong, you wish, why? Because if the annual report was wrong, you can correct it. You can say this is A, this is C. But if your understanding is wrong, then you may have to redo the audit, because based on this, no, you fixed the materiality, you fixed your procedures, you did the testing, and at the end of the year, if you come to know that instead of segment C, segment A was important, then you are gone for a toss, because already board meeting would have conveyed now. That's why you always wish, hopefully the understanding is not wrong, but that's what you are trying to look here. While reading the other information, you should be also looking for something which is not related to the financial statement, which could have got materially misstated. For example, I told you, they might have told that we have found out the medicine for cancer. We got the license from the government to operate on this particular circle of whatever, Airtel, like your 3G, mobile 3G. Something like they must have told something to mislead the investors. Okay, so you have to see, is there any such item which is totally misleading, which is not connected to this organization, or they are not done. This is not the reality. So first thing is you have to obtain the information. Second thing is you have to read. While reading, you have to compare with the financial statement, compare with your understanding, and you can say this is point number C. You have to see whether there is any misstatement. Yes, with this, you are done with the first objective and the second objective. Now one question comes, what if you identify the inconsistency? Okay. So next is you have to respond to the inconsistency. See students, inconsistency will take 2 forms. When the inconsistency means what? You have got the annual report here, you have got the financial statement here, you have got your understanding here. If you compare with the financial statement, either this will be wrong or financial statement will be wrong. Either annual report will be wrong or your understanding will be wrong. And the third scenario is something annual report only wrong because misstatement. Okay, let us take the first scenario of comparing annual report with the financial statement. So if the auditor identifies the material inconsistency, first he need to, okay, or it becomes a information that there is a misstatement, he shall discuss the matter with the management and necessarily perform the procedures. First thing you have to find out a material misstatement of whether this is a problem in other information, or whether this is the problem in the financial statement, or my understanding needs to be updated. Where exactly is the problem? If revenue is 500 crore here, 480 crore here, where is the problem? Is this number correct or this number correct? If I believe that segment C is 60%, but they are telling segment A is 60%. No, who is correct? Annual report is correct or my understanding is correct? So this is what you need to first determine. Okay. Now let us take the first scenario where you have got a problem with the other information. That means the problem is not with your financial statement. Problem is there with the annual report. First thing, ask management to please correct. You tell, sir, actual financial statement shows revenue of 480 crore. You are telling 500 crore, which is wrong. Please correct. You are telling, sir, as per my understanding, segment C is 60%, but you are telling segment A is 60%. Please correct. Please change that print mistake or whatever. If the management is going to agree to it, yes, you please check whether they have corrected it. But there are chances that management might have refused. They say, no, we are going to write like that. It is none of your business. Annual report, you are not auditing annual report. Are you signing the annual report? They can ask ulta question to you. If they are not going to do the corrections, you have to communicate that matter to the TCWG and request for the correction. If the management is not willing, TCWG, but still if the TCWG is also not willing, okay, if it is not corrected after communicating also, you may have to take appropriate actions. Now, what is that appropriate action? You have to either modify, if you are not issued the annual report, you have to modify your audit report. You have to give a qualification, or you may have to think from withdrawing the engagement if permitted under the law or regulation. Yeah, because it's the integrity question. No, they are trying to mislead. How can you get associated with these people? Okay, if the auditor concludes that okay, this is first one. I hope you are clear. If the problem is with the annual report, first ask the management to correct it. If they correct it, verify it. If they don't correct it, you will communicate to TCWG. If TCWG is also not going to do, then either you modify your report or withdraw from the engagement. Okay. The auditor concludes that the material misstatement is after the date of auditor's report. Okay. If you have not issued the audit report, you will consider modifying. But what if you have come to know that misstatement after you have given the audit report? If the other information is corrected, you verify it, but not corrected, then take appropriate action. Just go and figure out what is your legal right. How can you bring to the notice of the shareholders? Should you go and resign? Should you inform SEBI? This is what you need to figure out. Are you clear, students? So, in this scenario, because when we compare, okay, I can show you something like this. This is my annual report. This is my financial statement. And this is my understanding. Now, in annual report, there can be 3 mistakes. Or in the financial statement, there could have been mistake. Or in my understanding, there could have been mistake. Follow? Now, these two are inconsistencies. This is material misstatement. So, if I find that there is a problem here, inconsistencies, I'm taking like this. I'm comparing these two things first. Because these two things I'm comparing with this. If I find that there is a problem with the annual report, either in terms of my understanding or in terms of my financial statement, first I will ask them to correct it. Then I will follow the procedure. I hope this part is clear. So I have got only one heading. Both the things I will do it. What about the other side, where the problem is with the financial statement or your understanding? If the problem is with the financial statement, again, first I will discuss with the management and ask them to correct the financial statement. If 500 crore is the correct revenue, then I will ask them to change the financial statement. Or if segment A itself is the actual the majority 60% volume, then I will revise my nature, timing, extent of the audit procedures. I will revise my audit. That's why if you see here, how to respond if the problem is with the financial statement or understanding. Yes, the auditor concludes if there is the understanding or the financial statement problem, you have to respond appropriately. That means you should ask management to change the financial statement, or you have to change your nature, timing, extent of the audit procedures. I hope it's clear. Yes, let us see section test your knowledge 17 question. Jina Chandra and co chartered accountants have appointed statutory auditors of Gurudeva Limited. They are the chartered accountants. The team completed the audit. and preparing the process of audit report. Management of the company has prepared the annual report. See, the moment you see this word annual report, because this is discussed only in SS 720 and 720 belongs to chapter number 7. Yes, you understood where this is coming from. Now, auditor in charge was going through the draft annual report. Is he supposed to do? Yes. Observe that the company has included in its annual report downward trend in the market price of key commodity raw material as compared to the previous year. Okay, so there is some trend in the market price of the raw material. They say, okay, last year, this is my previous year, the commodity price was $100, and this year, current year, that commodity price has come to $80. They are trying to give one rosy picture. Look, our cost of raw material is reducing. However, the actual profit margin of the company as reported in the financial statement has gone in the reverse direction. The audit manager discussed this issue with the partner of the firm, who in reply said, auditors are not covered with such disclosure. He is asking, why you are going into annual report and all? Who is going to sign it? We are not bothered. Let them do whatever in its annual report, and it's the responsibility of the management. They should do it. Do you think the partner is correct? Answer is no, 1 mark. Discuss or analyze the issue with reference to relevant standards on auditing. So you will quote SA 720, maybe 1 mark. Then you are going to explain, okay, whenever you identify any discrepancy, inconsistency, what you should do. And a description of a trend or the market price of the commodity is an example of amounts or items included in the other information. That means whatever trend we are talking, trend itself is other information. So he has to request the management to provide the support of the management statement and the board of directors. So first thing, you should discuss with the management, and you should ask the management to correct it. Based on the further discussion or expression, the other information not materially misstated, you should conclude. So how you should respond now? First, you request the management to correct. If agrees to verify, refuses to communicate to TCWG. If not correct, then you have to modify your audit report. So the contention of the firm's partner is not correct. I hope it's clear. Yes, easy question. Now, let us come to the reporting part. The auditor shall include a separate section with the heading called other information. Okay, one heading we have already seen. Now, for an audit of financial statement of a listed entity, he has to say, has he obtained or expect to obtain the other information? If you are listed in that other information, at the date of auditor's report, has he got that draft? Or is he going to get the draft before the annual reports are sent? And for an audit of financial statement of unlisted corporate entity, auditor has obtained some or all the information. This is what you need to state. Okay. Other information section is mandatory. Okay. Whether you have received it or you have not received it, the draft, you have to tell. But for unlisted company, only if you have received it, then you have to tell. Okay, if you are expecting to receive it, you are not yet received it, then in your audit report, it is an optional disclosure. Okay, this is what this para says. So you need to have an heading called other information. When at the date of auditor's report for a listed entity, whether you have obtained or you are not obtained, that means it's mandatory. But for a unlisted corporate entity, you should have this heading only if you have obtained. That's it. Leave it. Not that great. Huh? Now, what you should tell in the other information section? First, you have to state the statement of management responsibility. What they are responsible for. Okay, they are responsible for the disclosure in the annual reports and all. Then you need to identify the other information, what you have obtained prior to the date of auditor's report. And for an audit of listed entity, you should also write what you are expected to receive from the management. That is what you need to quote. A statement that auditor is not going to express any opinion. Then auditor's responsibility has to be told. What is your responsibility? Is to read, consider and report. That's it. And when other information is obtained prior to the date of auditor's report, a statement that the auditor has nothing to report. That means everything is perfect. Or if the auditor has concluded the uncorrected misstatement of the other information, a statement that describes the uncorrected material misstatement. So if you have got any uncorrected misstatement, that has to be quoted. So when the auditor expresses qualified or adverse opinion on the financial statement, you should consider the implications of the matter giving rise to the modification of the statement required. 1 minute. Did we miss here anything? Okay, so when the material misstatement exists in the other information, you have corrected it. But somewhere they had told, okay, they have told here, responding when the material misstatement exists in the financial statement or auditor's understanding. Okay, in that case, you have to take the respond appropriately. Okay, I think at the end they are going to tell us, because what if there is a material misstatement totally not connected with the financial statement? Okay, then we are going to talk about the reporting. So these are all the aspects you need to have in the reporting. Okay, let's see one examination question which has been asked in May 25. Okay, this question we have already discussed. This is related to SA 710. Yes, you see in the May 25 exam, what question they have asked. Then they asked in December 25 MTP. PQR Motors Limited is the listed entity engaged in the manufacture and sale of automobiles. The company's management is also responsible for preparing other information. See, this is the key word. From this, you understood that this belongs to SA 720. Now, what does that other information includes? The annual report, where you will give the director's management discussion and analysis report, corporate social responsibility report. Then you will have a chairman's message, where strategic outlook and all you will explain. Future projections, forward-looking statements about the annual report, anticipated growth, revenue, expansion plans, etc. Now, the statutory auditors, ST and Co, are being completed its audit and prepared the auditor's report. They, following circumstances came. The director's report and management discussion and analysis reports are finalized and provided to the auditor before the date of the auditor's report. So, in this case, is it a listed entity? Yes, it's the listed entity. So, something has been provided before the date of the auditor's report. The chairman's and future projections are not yet finalized, but are expected to be included. So, then what you need to do in your annual report? You need to tell, because if I go back to the reporting, they said you have to tell like what you have received and what you are expected to receive. So, you have to identify it. So, in this case, how you are going to identify? Director's report and MDA are received. Chairman's message and future projections are yet to be received. See, investors have got a clarity now. What you have seen, what you have not seen. Now, issues identified. In management discussion and analysis, it is noted that there is a misstatement regarding the company's claim of achieving 20% reduction in the production cost. Now, my financial statement says the reduction was only 10%. Now, who is correct here? Audit evidence is correct. So, this is a mistake in the other information. The chairman's message, which is yet to be reviewed, contains optimistic revenue projects that appear to be inconsistent with the historical growth and the trend. Okay, so we are feeling that there is it has become too much optimistic. Now, what should STCO include in the other information section of the auditor's report? So, first thing he has to include what is received and what is yet to be received. If the management does not correct the identified misstatement, this 20%, even after the same is brought to the attention, what should you report under the other information section? So, here you have to say this particular issue, that in the other information there is a misstatement to the extent of 10%. So, you see students, very easy if you have understood it. As per SA 720, you say that the auditor's other responsibilities are discussed in other information. Other information section should include a statement that management is responsible, identification of the information like director's report and so received prior, and chairman's message and all received after. Statement that auditor do not express any opinion, description of the auditor's responsibility and result of review. No misstatement identified, or if a misstatement is identified, so as applicable. So, First question, what do you include in other information? You say we are going to include these elements in other information. Okay. Then second thing, how do you respond to that misstatement? So we are going to say that we have identified a material misstatement in MD and A regarding the claim of 20% reduction. However, the actual evidence shows it is only 10%. That's it. 1 mark you are going to get for this. Maybe 4 mark you are going to get for this, or 3 marks you are going to get, and 1 mark for these two identification, like chairman's message and this expected, this is received. So how many steps are there? We don't know, but I have shown yesterday. Steps maths will be applicable. That's it. There are only 2 questions. Then reporting prescribed by the law. We will move on. If the law has given you a specific layout or wordings, like how you should prescribe the annual report, like this reporting, like what we have seen this, no? If the law has given this, then we should follow that. But can I say we have done audit as per SA because 720? Yes, provided minimum of identification of the information, description of the responsibility, explicit statement of outcome of auditor's work for this purpose is included. Okay, so they have said refer series 700, 720, they have given one chart. Okay, you can refer this chart. Okay, students, so we are done with the biggest portion of your chapter number 7. See, now duties of the auditors we will go very quickly because we don't have any certificate and all. We have already seen that audit versus so and so. Yes, in duties of auditor, wherever Q&A comes, we'll focus on CAP. Yeah, because the same duties have been discussed at the intermediate level also, and there is no questions here. Okay, and in the law also I think they must have been discussed. So what are the duties of an auditor as per the Companies Act? So section 143 talks about the reporting duties of an auditor. Okay, first thing, auditor has a duty to inquire on certain matters. Now one very important question comes. In audit, do we say inquiry or enquiry? What is the difference between an enquiry and an inquiry? No, you may tell this also enquiry only. Is both enquiry and inquiry are same? How they are different? Are you aware? Okay. So if you want to know at what time the train is going to come, so what you do? You inquire. So in inquiry is a very generic where you try to seek an information. But when you inquire, you actually probe into it. That means your question is very intelligent. It's not just a general inquiry you want to know. You ask one question and try to figure out something out of that question. So in audit, we don't inquire, we actually inquire. So your every single inquiry should be very much probing. It should be very deep. It should have some connection to some concepts. You should have some expectations. Followed, no? It is not simple a generic inquiry what you make, but it should be an inquiry. So what that auditor should inquire about certain matters? First, have you made any loans and advances? And if yes, have you properly secured, and whether the terms are prejudicial to the interest of the company? See, what organization could have done? So many related party loans they could have given at a 0% rate of interest. Parent must have given to subsidiary. In FR, you are solving this problem, no financial instrument. Now, you have to ask, have you done anything like that? And that is prejudicial to the interest of the company and its members. See, these are all more like a propriety thing. Who is putting this responsibility? The government through section 143, subsection 1. Okay, and what is your intention of this inquiry? You want to figure out any such transactions have happened where there is no proper security. Like I told, no, Satyam transferred 500 crore rupees. Now, is there any transactions which are represented mere by book entries only? That means you simply passed one book entry. It's just a fraudulent entry, like provision entry. You told so much money paid to so much consultant. No documentation, no evidence of the work done. So you have to inquire, is there anything such like items like that? Now, where the company is not being an investment company. See, if you are an investment company, your business is to buy and sell the securities, like shares, debentures, etc. But if you are not an investment company, have you sold any shares, assets in the form of like financial assets at a price less than its purchase price? That means you have done some wrong financial decisions. See, it is fine with the investment company because that is their day in day out business. But you are not an investment company. Then why did you buy this investment? Why you are selling at less than purchase price? Now tell me, students, in our day-to-day life, do we do that? After we buy the gold, will we sell at less than the purchase price? After we purchase the land, will we sell at less than purchase? We will hold. Okay, because we think it's an investment. But a broker will not think, no, because they want cash, they may sell it less than the price, less than the purchase price. Now you are trying to inquire here, what wrong decisions have taken by this organization? What type of fraudulent entries are there? What type of related party loan special transaction? See, your every inquiry is trying to probe into these areas. Risk. Have you made any loans and advances shown as deposits? Okay. Now you see, students, loan to ABC, deposit with ABC. Ah, beautiful. Huh? Entry same, ABC account debit to bank. But the way you present it, no, it makes a lot of difference. Huh? Because this deposit gives a lot of confidence. Loan creates a lot of worry. Because your RBD won't come into picture with the deposits there. So that's why, have you given anything like that? Wrong classifications you have done? Have you charged any personal expenses charged to the revenue, director's personal expenses and all? And if you have stated that the shares have been issued for cash, have you really received the cash? Or if no cash has been received, whether the position stated in the balance sheet is regular and not misleading. For example, student, you had a loan and there is some restructuring happened. Instead of paying the loan by cash, you agreed to issue the equity share. So what journal entry you pass? Loan account debit to equity share capital. Now, in the balance sheet, is it, how do you disclose it? Is it received, cash is received? No, cash is not actually received, but it is equal to cash received, because if you would not have if you would not have issued the shares to your lenders, you should have paid them cash. So if you have not issued the cash, but we have settled it with the lender, that means it has been what they called it is equivalent to receipt of the cash. Like how you have presented this versus ESOP. In ESOP you didn't receive any cash, you gave free of cost. How did you present it? So here you are trying to see, is there any fake share capital? Okay, if you have given a settlement of the loan with the share, that is true, genuine. But you are passing fake entries and all, you are not going, it is not acceptable. So these are all the inquiries an auditor is supposed to make. Then there is one opinion by the research committee of the institute. Now what management may say, look sir, you asked us so many 7 questions and everything was negative, nothing is there. That means we are clean. Can you please tell in your annual report, in your auditor's report, that we have made inquiry as per section 143(1) and no loans have been made, no book entries are done, they are not sold. Okay, can you please, no personal expenses are charged to revenue, can you please give me a report? The answer is no. Why? Because the committee, research committee said, you have to report only if you have got some special comments to make. That means if there is a violation, you report. No violation, keep silent. No need to report. So management may pressurize you to report this when they have not violated, but you don't have any reporting responsibility. I hope it's clear. So auditor should make a report only if he finds adverse answers for the above matters. I hope it's clear. Yes, let us see one question here. Okay, it's an example. The senior manager of on the instruction of the CEO entered a fake invoice of the credit purchase. One example was there, aggregating 95 lakhs and cleared the payment of such a bogus creditor. Now, auditor is required to report the fraudulent activity to the board or the committee. It may be noted that he did not need to report to the central government under CAFinalFR. Okay, sorry, I think this example is not related to this. This will be related to the fraudulent reporting. Anyhow, we will shift it later. We have to report. We have to talk about it. Yeah, it's not inquiry. There is the fraud reporting, section 143, subsection 12. There we will talk about it. Okay, second thing, you have to sign your audit report. It should be signed along with the your membership number, name and all. Any adverse effect on the functioning of the company shall be read in the general meeting. So how to sign? We have already seen that. Due to comply with that auditing standards, so section 143 subsection 9 says you have to comply with the auditing standards recommended by ICI. That's why you have got in your opinion section, okay, you will always say, we have done audit as per our standards on auditing. This is mandatory because of section 143 subsection 9. Now you have got duty to report. Okay, this is section 143 subsection 3. If you pick any annual report, you will see this duty to report. Have you obtained all the information? Have the proper books of accounts have been maintained? If they have got a branch office, have they maintained proper accounts there and given you sent you the branch details? Whether the company's balance sheet is matching with the books of accounts. Anyhow, today after ERP and all, you need not check this. It is automatic. But once upon a time, your books of accounts and the trial balance has to be matched one by one. We had a green color we had green color pencil to tick that we have seen the opening balance or the book balance has been properly transferred in the financial. Whether they comply with the accounting standards, observations, okay, which have an adverse effect on the functioning of the company, whether any director is disqualified, and whether there is any qualification with relation to the maintenance of the accounts. Okay, these are all the things you may have to memorize. And do you have any adequate internal financial controls? Okay, so we have already seen chapter number 4, and this is always given as an annexure. Now, this is not applicable. This particular internal control reporting is not applicable to a private company. Why? Which is a one-person company or a small company, or whose turnover is less than 50 crore as per the latest audited financial statement, and aggregate borrowing made from the bank at any point of time is less than 25 crore. See, primarily, why they have exempted such private company? See, internal controls are very good. Auditor is supposed to report. But if you are going to spend time to work on the internal controls, because primarily internal controls are required to prevent the errors and fraud. The auditor may have to charge high fees now, because first of all, he is auditing the financial statement. Now he has to audit the internal controls also. See, big organizations can afford to pay, and they have to pay because public is interested. So many people are interested. But one-person company, because they are directly controlling it, small company, the small turnover, small loan, it becomes a burden on them if the auditor is made to study and report on the internal controls, and they are not much exposed to the public. See, they are not exposed much to the banks also. Hardly 25 crores. Maximum, max to max, they may lose 25 crores. That's why ICFR reporting is not applicable to them. Or such other matters as described in the Rule 11, okay, which includes, have you disclosed the impact of pending litigations? Then, have you made the provision for material foreseeable losses? Then, is there any delay in transferring of the fund to investor and education fund? Yes, students, I will move on because we have already seen there are no questions here. Whether management has represented you, because if you see the study material, they have given very big story there. In crux, you understand, has the management represented that they have not given any advance to any person who will act as an intermediary, and this is invested in another person? Like, for example, you are this entity, you have got another entity. If you do the fund transfer, you will come under the public lens. So what you might have done, you might have transferred this money to some intermediary, and that person might have given a donation. Have you done such round tipping transaction? Whether did you receive money indirectly from this entity through any intermediary? In the first case, have you given any money to the intermediary to give to third party? Or have you received the money from the intermediary from the third party? And based on that, nothing has come to the notice that representation contained misstatement. So you have to report it. Okay, so this is what story they have written. We can ignore it. Have you declared the dividend complying with section 123 after charging depreciation and all? Whether the company has used the accounting software having the feature of audit trail. Okay, that means edit log. That means any changes you do, anything you do, it will actually capture it, the log. And whether it has operated throughout. See, first thing, have you activated? Only activation is not sufficient. It should be operating effectively throughout. Third, it should not have been tampered. And fourth, it should have been preserved tomorrow if I want to verify. So auditor is going to report on 4 aspects of audit trail. Has it been activated? Has it been operated throughout? Has it not been tampered? And has it been preserved? Okay. So audit trail means, again we are going to discuss in chapter number 16, is the step-by-step sequential record, provides evidence of document history and transaction of its source. Like whenever you send a mail, see your mail will be in sent. It's like a trail. And if you see all the conversation happened, everything with the timestamp, they will be there. If you go through the bottom of the mail, no, you know from where that mail came, what conversation happened. That's like a trail, audit trail. Auditor can trace every step, financial data, particular transaction, right from the general ledger to its source document, from where this transaction came, you can trace it. Now, companies require the Companies Amendment Act 2017, effective from 12/9/2018, require that auditor of a company shall report under section 143 whether the remuneration paid by the company to the directors are as per according to this section. Now, advisory has been issued by ICAI that reporting requirement for the auditor of company needs to be covered under the head report on other legal and regulatory. That means whatever above things what we are talking, it should be covered under report on other legal and regulatory requirements. Yes, so you may have to just remember. I think in intermediate also you have had this. Okay, you have studied. We will move on. There are no questions on this. Very important, due to report on fraud. Okay, first I will explain you in the form of a chart, which you must be aware. Now, whenever you find a fraud, see, this fraud could have been either suspected or noticed, done by the entity or anybody. Then first thing you need to see whether the value is more than 1 crore or less than 1 crore. If it is more than 1 crore, then within 2 days, you have to inform to audit committee or board of directors and wait for 45 days for their reply. The moment you come to know, you meet within 2 days you reply. So there can be two scenarios, either they will reply or they will not reply. Whatever may be the case, if they reply immediately, you have to send within 45 days, you have to send the reply. If they don't reply also, you have to tell the intimation and you have to tell that they are not replied. You have to inform to the central government Ministry of Corporate Affairs in form number ADT4 in your letterhead. And you are protected from the confidentiality. That's it. This is what you need to do. What if it is less than 1 crore? Yes, same thing, you have to inform to the audit committee. And audit committee has to prepare a board note where they have to inform to the board, like who are the parties involved, what is the amount, what actions they have taken. And finally, this has to be presented to the AGM. In AGM, this has to be discussed. So this is all about your fraud. Okay, now reporting to the central government, section 143(12) says auditor, if he reasons that the fraud has been committed or committed by its officers or employees, that means any of the employee has done internally, he shall report the matter to the central government. Okay, the amount should be 1 crore or above. Then only he should report. And what is the manner? First, he should report to the audit committee within 2 days and wait for 45 days. The auditor shall forward his reply with his comment to the central government within 15 days of receipt from the observation. Okay, if they have not replied, then you have to wait for 45 days. And after completion of 45 days, within 15 days, he has to inform to the central government that, look, I have already given to the audit committee. They have not replied to me. This is my communication to them. Okay, and inform to the central government. Whom should you send? You have to send to the Secretary, Minister of Corporate Affairs by a speed post or a registered post with acknowledgement due in your letterhead, signed with the membership number and in form number ADT4. So any of these points, each of the points will fetch you 1 mark. You can remember and write. Alternatively, if it is less than 1 crore, if it is exactly 1 crore, you have to inform to the central government. But if it is 99,99,999, you have to report to the audit committee. Now, within 2 days of the knowledge, how you should report? See, how you should report to the central government, you need to have this ADT4. But here you need to tell the nature of the fraud, amount involved and the parties involved, because this is what you suspected. These are the employees must have done. Now, the board of directors should have the disclosure in the board report, in the annual report. So, companies should make the disclosure in the board's report when they prepare the annual report. And they should say nature of the fraud, parties, approximate amount, and what actions they have taken. So, when the auditor says nature of the fraud, amount, and the party. So, board has to add to it what actions they have taken. That's it. So with this, your fraud reporting is complete. So we'll see one of the test your knowledge question. You can go through this. See whatever I have just shown you. If it's less than 1 crore, audit committee, more than 1 crore, central government, with form number ADT 4. Now, subsection 13 of 143 safeguards the act of fraud reporting done in good faith. That means, students, see, you are actually informing to the central government some matter which you came to know in your professional capacity as an auditor. It is the fraud done by the internal employees. Are you not bound by confidentiality? You are bound by the confidentiality. Then how did you say? Because section 143 subsection 12 permitted you to do that. So section 143 subsection 13 says that since you have done this in a good faith, you are not contravened the reporting matter. That means confidentiality is not violated. So tomorrow ICA cannot take any action against you. Instead, if you are a tax auditor, and you find the fraud, should you inform central government? No, because you are not bound by the Companies Act. Are you supposed to inform to your income tax department? No. If you are a tax auditor and you end up disclosing this fraud to anybody, you will be bound by the confidentiality because you don't have any duty to report. Okay. Now it's very important that the provision shall also apply to a cost auditor and secretarial auditor appointed under section 143(204). Income tax is a different act only. Have they told in the Income Tax Act that the auditor finds that, then they have to inform? No. Then you don't have a response. You should not tell us. So this is applicable to them also, cost auditor or secretarial auditor. But if they have informed, you need not inform again. If anybody has not followed, any chartered accountant who is a cost auditor, secretarial auditor, or your chartered accountant, company auditor, have not complied with it, they will be liable for a penalty of 5 lakh rupees for listed company, 1 lakh for other company. Okay, let us see one question. This is your test your knowledge 12, question number 59. Okay, the last. You can go to the last question, 59. Let's see here. This is after Caro, I might have placed it by mistake. Yes, reporting on the fraud. During the course, this is your test your knowledge 12 question. During the course of audit, Guru has a reason to believe that the fraud of 75 lakhs has been committed by the employees. Okay. So this will take your mind to SA 240 also, but it doesn't matter. Why? In 240 also you have quoted section 143 subsection 12. It would have fetched you 1 mark. But if it is related to chapter number 7, then majority will be the procedures. If it is 240 related, then you have to write the answer as per 240. Now, is Guru has got a statutory obligation? See, this is the keyword to above matter to the central government in the portal. The answer is no. How should then he proceed? Then you have to talk about, no, he doesn't have because 1 crore is not crossed. Then you have to tell, if this is the case, you would have given through the ADT4 in MCA portal. Okay, in case of fraud involving less than so and so amount, less than 1 crore, he has to inform to the central government. Should he inform in the CARO? Because there is also one of the thing called you have to inform to the shareholders. But please remember, student, you have to inform in CARO only if it is noticed and not suspected. So if you have to inform to the central government, both noticed also, suspected also. But in CARO, you are going to inform only if it is noticed. So in the given case, what happened? Did you notice it or do you believe that fraud has happened? You have believed. That means you are suspecting. That means you should not be writing in the CARO. But here what they have told, I don't know. Other cases that I meant to say, besides the auditor has got obligation to report the matter pertaining to the fraud under this. Okay, they simply said that we have to report. But whether this case has to be reported or not, they didn't tell. I hope you are clear. Okay, so you have got no statutory obligation because the amount was 75 lakhs. So we have got only one question, students, with regard to this. Okay, and the majority of the questions, you see, lot of questions will go for CAP. Yes, we will focus on CAP. We will move on fast and we will try to focus on CARO. Yes, the auditor is also required to report under clause 11 of CARO. But this is going to happen only if it is noticed or reported, not suspected. Now, Auditing and Assurance Standards has issued a guidance note on reporting of fraud, section 143.12. So, one guidance note has been there. Now, the definition of fraud as per 240 and the explanation of fraud in section 447 of the Company Act are very similar, except section 447 includes act with an intent to injure the interest of the company shareholders or creditors or others who are not, whether or not any wrongful gain or loss. However, auditor may not be able to detect that they have intent to injure the interest of the company unless the financial effects are reflected in the books of account. Like, for example, what type of examples of fraud they are talking? See, they are given one understand. See, there is no question, but you understand here. SA 240 talks about two types of fraud: fraudulent financial reporting, asset misappropriation. Now, if you talk about section 447, which you have to report, they say that fraud includes such act also where somebody must have committed, whether they must have gained or not. So their intention is to create a problem with the intent to injure the interest of the company, whether or not there is a gain or the wrongful loss. Now we got into a catch. See, we will be able to figure out the fraud only if it is reflected in the books of accounts. But some frauds which are not reflected in the books of account, how do we can report? Are the investigators? For example, employee is receiving bribe for favoring a vendor. Now how I can report? See, actually there are three types of fraud. These are all called corruptions. One is called fraudulent financial statement, asset misappropriation, corruption. SA 240 gives responsibility only for these two, not for corruption. Why? Because corruption is sitting always outside the balance sheet. These two items are sitting inside the balance sheet. Can you detect corruption? Definitely yes. How? You have to send the article student behind that person and tell him, go and see whom he will meet, with whom he will eat pizza, and follow that person and see where he will go. Put you sit there and drink some juice and hear what they are going to tell, what they are going to speak. But Papa, that is an investigation. Audit is not an investigation. That's why these things where payoff is given, password of the managerial person is stolen or misused to access the confidential information. Let's see, if your employee is accessing the confidential information, how on earth auditor will come to know? Because these requires investigation actually. It's not going to reflect in the financial statement. Now one question came, if such type of incident happened, should I report? No. Now that's why the guidance note came. It says that the auditor shall consider the requirements of SA so far as the risk of fraud included in the definition of 240. So if the bribe is given, if the password is stolen, critical access is done, you cannot be expecting the auditor to go and find the financial implication and inform to the central government. I hope you are clear, students, about this para. What they are trying to tell, your responsibility to report fraud is restricted to which type of frauds defined in 240? Fraudulent financial statement and asset misappropriation. Only you should focus on this, not that bribe. Okay, so they say if you want, you can refer the guidance note. Already too much is there. Okay, we will focus this only. Then after the exams and all, you can refer this guidance note. Now, duty to report on the other matters specified by the central government. So if they said that if the government, after consulting with NAFRA, if they tell anything to the specified class of companies, they should include that statement also. Now, duties and powers of the auditor with reference to the audit of branch, okay, they have been already discussed in 299. Duty to state the reason for qualification. So whenever you give qualified opinion, you have to state the reason. And this is what we call basis for the qualified opinion or adverse opinion, basis. Yes, so there are 8 aspects to be reported. Now comes the CARO. Yes, we have to spend a bit time here, and I hope by tomorrow we are going to complete it. Now, when I was writing final, no, this is called a MAOCAR, manufacturing companies, manufacturing and, okay, it was like this, MAOCARO, we used to call MAOCARO, MAO, okay, later it has been made CARO 2016 and now they have brought CARO 2020. Okay, so what is this CARO reporting? See, this is something like additional reporting to the investors about something happening inside the organization. Okay, see, we have informed the fraud to the government, we have made certain inquiries, but investors want to know certain things. So there are 21 clauses which an auditor has to report, and they are quantitative. You have seen one of the case, appropriate reporting means quantitative, means we have to write the numbers and all. Now, whom the CARO is applicable? First of all, they have made it mandatory under section 143.11 that auditor has to issue one CARO report. Now, whom this is applicable? Now, CARO is an additional reporting requirement. That's why always know you have got auditor's report, then annexure 1 you have got CARO because it has got 21 points. Annexure 2 you have got ICFR reporting, internal control reporting. Now, they say that CARO is applicable for every company, including a foreign company. However, they are going to give exemption to the following class of companies. Who are those? One, a banking company, which is defined in the Banking Regulation Act. Why? Because in the banking bank audit chapter, we are going to see there is an extensive reporting for a bank. So this is a simple thing. So they said banking not applicable. Insurance company also are covered by IRDA. So they have given some extensive reporting thing. So insurance company also not applicable. Section 8 companies also it is not applicable. Reason because Section 8 is generally not profit organization. Auditor is reporting on 21 clauses. He will increase his audit fees now. Can the Section 8 companies afford? Now, one person company, small company, no, again the same reason. Because again reporting on 21 clauses means my audit fees will increase. First of all, they are trying to pay the existing audit fees only. They are trying to figure out the cost versus benefit analysis. And since they are one person controlled, small family controlled organization, they say, okay, this is also not required. Then a private company, which is not a subsidiary of a holding or a holding of a public company. See, if public company is there, somewhere consolidation will happen. So people, the investor should be knowing. Either you may be a holding company of a public company or a subsidiary company of a public company, that doesn't matter. Then CARO is applicable. But if you are a simple private company whose paid up capital is not more than 1 crore, that means a small private company. Please note down it is and, not or. That means I have to bring down now. I have to make use very small. Not only this, your revenue and the borrowing also should be less than 1 crore at any point in the last year. And your revenue should be less than 10 crore. If any one of these conditions crosses, that means you are not small private company. One is your small company. There is a different definition only for a small company. But we want to exclude certain small private companies. That's why we have given a limit of and. If any one of these conditions fails, then CARO becomes applicable. All the three conditions should have failed. Then only we can call you as a small company. Example number 21. Okay. For the purpose of assessing applicability of CARO, what kind of loans to be considered? Because they said here, no, somewhere that borrowings exceeding 1 crore. Which type of borrowing will be covered here? Okay, so they have given some example. So they may ask you one question based on this. So the types of loan applicable is definitely long-term and short-term will be applicable. Outstanding balances of borrowings to be considered as a borrowing outstanding for the purpose of computing the limit of rupee 1 crore. That 1 crore limit they have given. No, they have to consider the outstanding loan as on that day. Are normally of the term loans, demand loans, export credit, cash flow, overdraft facilities, bills purchase, discounted. Non-funded credit facilities. Can we have it? Okay, they say to the extent they have devolved. What is this non-funded based credit facility? Like we have got a bank guarantee. We have got LC. Now tell me students, when the bank guarantee or LC is given, will the cash outflow will happen from the bank's premise? No. That's why they have said that non-funded. That means fund has not gone out. Should you consider them for your 1 crore purpose? It is more like a loan only. No. Answer is no. To the extent devolved and converted into fund. That means tomorrow this bank guarantee is activated and the bank paid to the money to that some creditor. Now this becomes part of your 1 crore limit for the calculation. Otherwise, bank guarantee should not be calculated. And if you have already taken the long-term loan, outstanding balances only should be considered during the year. for the purpose of computing 1 crore. And that amount includes long term, short term, in the form of demand loans, export credit, cash credit, and OD, bills purchased and discounted. The amount of outstanding borrowing would also include amount of bank guarantee issued by the company where bank guarantees have been invoked. Okay, which I already told, which is a part of your non-funded. Encashed or letter of credit has been devolved. Same, non-funded. Both points are same. In case of the term loan, interest accrued and due is also part of the borrowing, obviously. In case of a cash credit facility whose balance is fluctuating in nature, the order would apply to a company in case any day of the financial year, the amount of the credit facility exceeded 1 crore. So please see to it that your credit won't go more than 1 crore. Then you'll be ready to pay money to the auditors, extra money. Now, aggregate of the borrowing disclosed in the financial statement would need to be considered based on the applicable generally accepted accounting principle. Like, how do you consider? Accounting should have been done as per accounting standard or Ind AS. That means no special way of measurement and all. Like, you can take the book balances appearing in the financial statement. So this one example is very important, student. They can ask you in the exam. Yes. Now you need to have certain elements which is told in paragraph 3 and 4. Okay. Now let us go by one. They have not given the heading. I have given the heading. So first we have to talk about para number 3.1. What is that I need to disclose as an auditor? Report as an auditor. Whether company is maintaining proper records, fixed asset register, related to the property, plant and equipment, including the quantitative detail and situation. That's why any FA register, if you take, they talk about the quantity and they talks about the place, so that physical verification can happen. And this is not only for PP, you need to have such records for intangible assets also. Because intangible records assets may be in the form of one certificate, it could be in the form of one CD. Okay, you need to maintain a record. Then, when you have these records, physical verification has to happen. Now, whether the property, plant and equipment have been physically verified by the management at a reasonable interval, generally this interval will take 3 years. Every year it is not possible, only inventory is verified every year. Whether during this interval, whenever you do the physical verification, was there any discrepancy noticed? And whether they have properly accounted in the books of accounts. This is what you need to report. And if it's crossing 3 years, then you may have to report that, look, management is not doing the physical verification of the fixed assets at the reasonable intervals. You have to quote because it's an adverse comment. Next comes, okay, what about the title deeds of the immovable property? Like suppose in your house, your parents have purchased a property. It is in whose name? Probably it must be in your parents' name only. So in a company, when the company has got immovable property, the general expectation, the property deed should be in the name of the company. But is there any property, okay, which is other than the lessee and lease agreement, where the title deeds of all the immovable property disclosed in the financial statement are held in the name of the company? If not, then you have to give the disclosure. Please mark it very important. Remember this. This table is very important. I'm telling you, very important, because they can give you one case based on this, and you have to remember what all the components to be disclosed. If the title deeds are not there, so you tell me from an ordinary investor point of view, there is some immovable property and the title deeds are in the name of a director. Obviously no, because if it is not in the name of, and again this happened for Satyam case. Satyam, what happened? So many properties, because he anticipated a real estate boom in 2007. Wow. Really it happened as per his expectation. So he was putting so much money, and in Benami name and all he used to purchase from Satyam. Company's money, properties are getting purchased in somebody's name. This type of issues were happening. That's why all these points came later. Now, what you want to know? Okay, first thing I want to know about the property. Second, I want to know about the value. And I am very much interested to know in whose name it is kept. Like in your family also, your grandfather has got one property. He wanted to, in his will he has written. Are you not interested to know what is that value? What is that property? And in whose name the grandfather has given this? How he is related to this? Is he a promoter, director, or relative, or an employee? So these are all the elements you would have naturally interested to know. And this is the data you have to give to the shareholders. What is the period held? Indicate the range where you appropriate. So from which period to which period this was in this person's name? And what is the reason that was not held in the name of the company? Is there any particular reason? And the next one, whether the company has revalued its property, plant and equipment. Again, generally it will take 3 years, including right of use assets. Okay, right of use assets happens for lease 116 or intangible assets during the year. If so, whether the revaluation was done by a registered valuer. Who had done that? Okay, who is a registered valuer? You have to go back now because somebody must have qualified as a registered valuer. Specify the amount of change if the change is 10% or more. See, because you have done the previous valuation, this year also you have done the valuation. If the amount is substantially different, that is the risk now. That means some assets value has got eroded. Now, what is the threshold for me? 10%. So up to 10% changes, you need not talk about it. But if any assets value has substantially eroded more than 10%, the aggregate net carrying value of each class of property should be disclosed. Okay, and the last one, whether any proceedings have been initiated or pending against holding Benami property. I told you, Satyam, Benami means somebody's name you hold the property. Because when the raid happens, you see, you will not be able to trace only because it is somebody's name now. They only don't know that their name, some property is held. That's why they are called Benami, no name. Is there any proceedings are going on? If yes, you have to disclose it. Okay, there is one MTP model test paper question on this. Let us see in exam how they will ask you questions. See, beautiful students. Arjun was appointed as an engagement partner for conducting the auditor of one unlisted public company. Now, for them, CARO is applicable. Yes, because every company is applicable except those companies. Unlisted public company, so it's not even a private company. So CARO is by default applicable. Now, Brijesh, one of the senior engagement team, was given responsibility to audit the matters as per CARO 2020. Clear. Reading this, your mind is very clear. Chapter number 7, CARO they have asked. He has made the following observation. Now, in the CARO, which is that clause they are trying to talk now? One of the plant and equipment. First, this is clause number 3, para number 3.1. On a lease, which is right to use asset by Sinwar Limited, who is your auditee, was revalued based on the valuation by a registered valuer. That's perfect. And the net carrying amount of the plant and equipment was changed from 4 to 4.45. Now you have to calculate 0.45 divided by 4. How much? 11.25%. So this requires a disclosure. You have to report it now. During the year, cash credit limit of 5.5 crore was sanctioned based on the security of the current assets, which was reduced to 4.5 crore after 6 months. Quarterly returns have been filed by the company with the DMC bank, which are in agreement with the books of account. This is another clause we have yet to discuss. You are required to examine the content of Brijesh regarding reporting of the above observations as per CAP. Okay, so what is that you need to report? Clause number 3D1. Okay, the auditor is required to report about the same para you say. In the given case, the amount is more than 10%. That's why he is required to report. Then para number 3B2. The auditor is required to report whether there is any point company has sanctioned a working capital loan. Okay, 3.2. Okay, we are yet to come. We were in 3.1 only. In excess of 5 crore rupees. If that is the case, we have to write the para. So that's why he is required to report. Okay, we'll see this also. So in the even case, the cash credit limit is 5.5 crore, which is more than 5 crore. That's why he has to report that about the para 3.2. Yes. Now 3.2 inventory. The second part is your inventory. Whether the physical verification of the inventory, see, fixed, you don't, for a fixed asset is the FA register. But for inventory, so by default, your accounting inventory register will be there. So that's why they didn't ask you, because they know any company will maintain. But people may not maintain FA register. Followed, no? At your home, you have got a very good clarity how much dal is there, how much rice is there. But you may not have made a book. You know that you have got gold, you have got land, and all, but you may not have made in the one register asset. whether physical verification of the inventory has been conducted at a reasonable time, and whether the coverage and procedure is appropriate. Anyhow, you are covering 501 also, so it is becoming very easy for you to report now. Is there any discrepancy of more than 10%? If yes, have it been properly dealt in the books? So it's very easy to remember, which is very similar to FA. Whether during any point in time, have you been sanctioned working capital limits? Why it is connected with inventory? Because working capitals are generally given based on the inventory what you have. Debtors and stock and the debtors, stock and inventory. So based on your pledging of the inventory, some working capital must have given. Is it in excess of 5 crore rupees in aggregate from the banks and financial institutions based on the security of the current assets? Whether if yes, then whether the quarterly statements are in agreement with the books. See, because what could have happened? They must be doing some fraud with the bank. I don't know, salad oil case and all. So here the auditor is made to check such quarterly returns and they are whether it is matching. So if a banker is going to read this annual report, no, okay, very first thing he will go for the opinion and immediately will turn the Caro page and see this, because he is interested to know more about this. He has already given a loan. He wanted to know whether the statement what he is receiving, because we are talking general purpose. No, that's why we have the interest of so many people are covered here in the Caro. Government also will come into picture. So if he has already given a loan more than 5 crore, the moment he receives the annual report, the very first thing he will go to clause number 3(2)(b) and see whether what he is receiving, is it matching with the books. He doesn't know, no, he doesn't have any mechanism only to figure out. Yes, now you see there are 3 questions. Test your knowledge. 8. While the audit team has identified various matters, they need to advise in the CAFinalFR. Okay, keyword is identified. Physical verification of only 30% value of the items were conducted and balance will be conducted next year. No, you have to say wrong. You have to have what constitute reasonable interval. Okay, whether the physical verification of the inventory has been conducted. Now, what is reasonable interval? That depends upon the circumstances of the each case, nature of inventory, location, feasibility, etc. But whatever, all the items should have been verified at least once in a year. So auditor should point out this specific area and consider the impact on the financial statement and report accordingly. So you have to tell to the members, look, inventory verification is not happening from time to time. Okay, they have done only 30%. Okay, so like this you may have to quote. Now, May 25 RTP. See the way they ask you. During the audit, Kunal found physical verification of the inventory has been conducted by the management on regular interval. Your mind will take you to 501. The following is the summary of the physical verification. Raw material work in progress FG spares as per books and verification. Now you have to figure out the percentage here. 1180 minus 1160. So this is 1%, 430 by 420. This is 4%. 290 divided by 2790. 10.39% finished goods FG, and 220 minus 180 divided by 180. It gives you 2.2%, 22%. Okay, so now you have understood. Okay, but you are not sure whether it's CARO or not. Comment with reference to CARO. Immediately you understood now. Now clause 3A comes and you have to talk whether there is a discrepancy more than 10%. So you found that there are only 2 items that there is a discrepancy more than 10% as compared to the book value. Okay, so you should report this. Okay, so they can, in RTP, it's a simple thing, but they can add something extra also. Don't expect the same thing they will ask you. Now, in exam November 24, they asked you one more question. Tea Limited is a public company exclusively dealing with blending, processing, selling brand tea. During 23-24, it availed credit facilities from Kuber Bank. Your mind will go to chapter number 14. The bank has sanctioned a working capital credit facility to the limit of 4.5 crore and a letter of credit facility to the extent of 2.5 crores, aggregating to total 7 crores. on the basis of hypothecation of the stock and book debts of the company against utilization of the limits by T. During the year, in case of cash credit, only 3.9 crore was outstanding and letter of credit was 1.94, aggregating total 4.95 crore. That means they have utilized only 4.95. The company has faced a sluggish market for its various brands due to inability to cater the requirements. It faced a severe cash crunch also. In order the bank does not reduce its drawing power to the working capital limit, management decided to peg up the values of the stock statement it submitted to the bank. Okay. From here, suddenly 570 came to your mind. Demand fell down. Is the bank is going to not stop? But suddenly you saw that the management has manipulated the stock statement because bank should not reduce the credit limits now. They should not reduce now. Otherwise, they will classify them as NPA, and hike was 15% in the quarter. When an engagement partner leading the audit team happened to review the stock statement subjected to the bank, it was noticed that the stock figures declared were not agreement with the books figures. The matter was taken up with the CFO and he contended that why you are examining all these things? Why you are concerned with the stock statement? Why you are talking about the what we have submitted to the bank? And he is telling, look, Baba, your working capital limit is also less than what it has been told. You told Caro, no? Caro is talking about 5 crore. You see your working capital is less than 5 crore. And this is beyond the scope of reporting to Caro. Is the contention of the CFO correct? Analyze the issue and discuss the reporting responsibility. The very first thing you understood that is coming from Caro, but see the beauty of the question. You need to talk about clause number 3B, 3.2b, where if working capital loan is given more than 5 crore rupees in aggregate from the bank or so and so, whether the quarterly report has been given and financial institution their agreement with the books. The above clause requires the auditor to comment at any point in time it has sanctioned 5 crore. Now, what has been sanctioned the working capital limits in aggregate. Now, T Limited has been sanctioned a working capital of 4.5 and letter of credit of 2.5. So, total it comes to 7, which is excess of 5 crore. So, it is not that what you have utilized, but what has been sanctioned. Because any point of time you could have availed it. So, in this case, you get into the reporting responsibility of CAP. The auditor is required to ensure whether quarterly reports are done. Thus, the contention of the CFO is not correct because he is talking about the 5 crore limit which has been utilized. But we are talking which has been sanctioned. You see, students, how much beautiful clarity emerges if we see one question. Okay, this could have been a confusion, but what if you have remembered and quoted this, at least 2 marks you would have got. Okay, even though your assumption that you must have misunderstood it and you said no, it is less than 5 crore. But 2 to 3 marks would have fetched only to write this. Okay, so contention is not correct. I hope you are clear. Anyhow, we can ignore this because this question has already come for the exam. Now, clause number 3, loans and advances. We are moving to the balance sheet items. First, we started with the PP because primarily Caro is for a manufacturing company because previously it was for manufacturing, Maokor. Now, loans and advances. So, what is the difference between loans and advances? Advances are more like you are going to see in case of loan, you may end up getting the cash back. They are like you are given a loan, they will give you back. Advances are more like bookings, the capital advances. You want to go to a hotel, you pay them advance. It's not a loan. In such cases, you are going to receive the service of the goods. So, now what is that you need to report related to loans and advance? Whether the company have made investments or provided a guarantee or security, granted any loan or advance in the nature of loans, secured or unsecured to the company, firms, limited or any other parties. Okay, anybody, have you made any investment, provided guarantee? See, very important ones. I told you Enron story. They got these debtors, converted it into pieces, sold to the investors and gave one bank guarantee. Now, see, this also should be reported. Investors should come to know what is happening in the organization. Are they related? Why did you give bank guarantee to someone? Are they related to you? So, this could have been given to company, firms, LLP, etc. Now, have you provided loans and provided advances in the nature of loans? Should guarantee. Okay, and this is not applicable for companies whose principal business is to give loans only. Okay, banking companies are exempt, but for NBFCs also, this is not applicable because their business is to give the loans. Now, why Satyam gave 500 crore loan to that small private company? Those such matters will come get reported now. Because if your business is to give the loan, like ICICI Bank or an NBFC or Bajaj Finance, then we are not going to talk because that's what generally you do. If you have given any such loans or advance, aggregate amount of during the year and the balance outstanding at the end of the year with respect to such loans and advances to subsidiaries, joint ventures and associates. First of all, relatives. You have to tell how much loans and advances you have given to your subsidiary, joint venture and associates. The aggregate amount and the balance outstanding with respect to loans and advances, guarantee or security, parties other than subsidiary, joint venture and associates. So you give me that. Whether investment security given, terms and conditions, okay, of loans and advances are prejudicial to the company's interest. So this inquiry you have already made, but here you may have to report now. Okay, this is the reporting requirement. Have you made any loans and advances who's like 0% interest rate to subsidiary? This is very prejudicial to the parent. Now, from an accounting point of view, you may split the fair value and account wise you can do something. But investor should have been told no that the parent has given 0% interest rate loan to the subsidiary. Now, in respect of loans and advances in the nature of loans, whether schedule of repayment of the principal and payment of the interest has been stipulated and whether the receipts are regular. See, if you have taken a loan from your parents, do you think they will have an agreement and they will write when to return, how much to return, how much interest will be charged? No. Hand loans with the brothers and all, you straight away go take loan whenever you have got money, you repay. That is how you operate with the related parties. See, primarily they are focusing about related party transactions here. Now, have you, whenever you have given any loan, okay, have you given the repayment schedule? Is it recovering? If you are not given, that means that particular party must be a related party. How you can give? I will also take from such company. If the amount is overdue, state the total amount of overdue more than 90 days because 90 days is an NPA for a bank. For non-banking organization, that is not applicable. But I am going to show like how much is overdue more than 90 days. Whether have you taken steps to recover the money? Whether any loans and advances granted which was fallen during the year have been renewed or extended or any fresh loans have been granted to settle the overdue. Like this is what banks do. In order not to classify as an NPA, no, they give further loans. With the new loan, they will repay the own loan. Is such type of practices which is happening in the bank, is it happening in this client also? Have you given any loans, fresh loans overdue? And the same parties, if so, specify the aggregate amount of such loans renewed or extended or settled. Whether company has granted any loans or advances in the nature of loans, whether repayable on demand, that means no terms and conditions. Whenever I ask, you should give without specifying terms and conditions. If so, specify the aggregate amount, percentage to the total loans, aggregate amount of the granted to the promoters, related parties, etc. Okay, so they have already asked one examination question. Again, you can reduce the priority of this particular clause also. Now, Brown Enterprises is an unlisted public company, but CARO is applicable. Granted loans to its subsidiaries. Stood as a guarantor to the loan taken for a limited, taken by a LLP and made investments in the startup during the financial year. See, you are not an investment company. You are not a bank. You are not a finance company. But why you are doing these loans and investments? We want to know now whom you made. You make. We are not telling that you don't make. But it should not be prejudicial to the interest of the company. The financial statements disclosed loans provided 10 crores to subsidiary and 6 crores outstanding. 5 crores to subsidiary B fully repaid. 3 crore loan to UR&Co from partnership firm. 1.4 is overdue from 120 days. So 90 days incomes and they are not related party. Guarantee was given to Milestone LLP 7 crore. Outstanding is full. Investment of 4 crore invested in KD startup. Now, for the overdue loan, Brown Enterprises has initiated legal proceedings for recovery, but no settlement has happened. This 120. Now that you need to quote. Has you taken the steps? All the loans and guaranteed have been documented with the terms and conditions. That's fine. That means you have properly documented. Repayment schedule is there. one loan of 2 crore to subsidiary A was renewed upon maturity without repayment. This one more clause comes there. Have you renewed anything? Now, based on the above fact, analyze reporting of CARO. So, you understood clause number 3, loans and advance. The management of Brown Limited contended that the reporting requirements of CARO of overdue in respect of URN Co subsidiary A is not applicable. No. Comment. No, it has to be done because subsidiary also has to be reported there. So now, first thing you are going to quote about CARO. Loans and advances, report the total amount of loans payable to the subsidiary, 15 crore, other party, you give the breakup. Outstanding loan balances you have to give, subsidiary A 6 crore, other nil, and partnership firm so and so, due more than 120 days. Then, second clause, guarantees and securities offered. Disclose the guarantee of 7 crore provided to so and so, because if you go by this, see, first is aggregate of loan to subsidiaries to others. Now, prejudicial not coming here. Amount is overdue. Yes, 120 days. That you have to state. That you have already stated. Have you given any guarantees? Okay, so guarantee. Okay, guarantee is also covered here. Guarantee is provided. That also you need to say. Guarantee, disclose the guarantee paid to MMP, and it was prejudicial to the interest of the company. Okay, so why it was prejudicial? Okay, because it's still outstanding. Now, investments made, report 4 crore equity investment made, ensure compliance with the term, it has been properly complied, and you have taken action, legal proceedings are progressing, nothing has come back. There was a renewal of loan given to subsidiary A, include this amount and the proportion. So, in view of above, it can be concluded that the management is not correct, auditor is required to report. So, alternatively, clause 3 requires the auditor to report whether during the year they have made investments, provided guarantee, etc. So then you say to subsidiary, non-subsidiary, whether investments are provided. Okay, you just write all the clauses. Okay, all the clauses. So then you say in the given case you have to report this. So you can present like this also. You can present like the alternative way as well. Now the contention of the management is not correct. So how the mark allocation is going to happen? So this is a 5-mark question. So 1 mark though you are going to get for this straight away. Rest of the 4 marks, see, they will give you for any of the points. Please understand. You might have written these clauses. They could have given you, maybe there could have been 2 marks allotted for this, 2 marks allotted for this. So if you would have written any of these 2 clauses, any 2 clauses, they would have given you 2 marks. And if you would have connected to any of these, that this has to be reported, this has to be reported, they would have given you 2 marks. It's not that everything you have to write. Okay. So you might have chosen that 120 overdue, or you must have chosen subsidiary A has to be reported. This is the outstanding amount. So it's not required. You have to write everything. So in your mind, you can have one marking scheme. I hope it's fine. It's good that we have seen some questions. Yes. So we will move to the other thing, compliance with section 185, 186. I don't think so they will ask you any questions on this. Okay. In respect of loans, investments and guarantee, whether provisions of section 185, 186 have been complied. Now they didn't tell what it is. What does section 185 says? It says about loan to a director. It says that you can give a loan to a director only after passing special resolution, and loan should be used in the principal business activity of the borrower. That means it should not be rooted somewhere else. What is the principal business? Then only should be used. And second is the intercorporate investments, loans and advances. No loans and investments by the company through 2 layers of investment companies. Okay, what is this 2 layers of investment company? In FR you must be knowing that if you have got, okay, 2 layers goes like this. So you are the parent company. I will take 2 scenarios where you have got subsidiary number 1, which is 100%. And you have got subsidiary number 2, you have got 80%. 80%. You have got subsidiary number 3, subsidiary number 4. Okay, let us imagine again here also you are holding 80%. Subsidiary 2 is holding 80%. Now, can this subsidiary 4 have any more? No, stop. This is called two layers. A sub-subsidiary cannot have more than two layers. Why? Your chain holding consolidation becomes very difficult. It is very impossible to do such type of consolidation. That's why they have stopped you after two layers. That's why in consolidation, you will always have chain holding with the two subsidiaries. You can have 250 parallel subsidiaries, like subsidiary 3, subsidiary 4, subsidiary 5, 500 subsidiaries you can have. But down the line, more than two, you cannot have. But in the first case, if the first level happens to be your 100% holding, then this is considered as a zero layer. Then subsidiary 3 can have sub-subsidiary 4, and from here, it should stop. So, have you violated this? That is what you need to report under section 186. Like, you have made investment in the subsidiary now and acquired a subsidiary. Has it gone more than two layers of investment? That's what you need to report. That's why they are not going to ask you on this. Okay. So, one was the very critical point was this loans and advance. They have already advised. Forget it. You give low priority. Inventory also they have done. But fixed asset, there are questions on model test paper. Just focus on priority one for your fixed assets. Okay, they can ask you with this table how it should be reported, what information to be reported. Next, deposits accepted. So, can you accept any deposits? No, because if in India, if you want to accept deposit, then you should take permission from RBI. So, any deposits that have been accepted by the company, which is deemed to be deposits, you have to comply with the directives issued by RBI. Okay. And or any other provisions of the Companies Act. This is what happened with the Sahara case. Sahara took 24,000 crore deposits and they didn't take the permission, okay, of SEBI because it is not a public issue. They took the permission of the Companies Act. Okay, then there was a violation and all. SEBI came into picture. They asked to refund. So whatever it is, whenever you have accepted the deposit, now you have to comply with the RBI or the Companies Act rules made there under. If not, you need to say specify the nature of contraventions. If an order has been passed by the Company Law Board, National Company Law Tribunal, or RBI or any court, whether the same has been complied. Okay, later what happened? The Supreme Court passed one court order that you have to refund the money. So in such cases, you have to say if such court orders have been complied. That's what you need to report. I don't think so. They may ask you question. Maybe one more question can come. Cost record, very easy. And they, again, I don't think so any question can be there. Whether maintenance of the cost record have been specified by the central government. In the previous syllabus, you had to study cost records also, section 148. You see how much syllabus reduction has happened for you. So in section 148, whether the government has told your client to maintain cost record and have you maintained such cost record? That's what you need to report. Clause number 6. 7. Payment of statutory dues, very important. Whether the company is regular in depositing undisputed statutory dues, not disputed. Like you have got deadlines to deposit GST, PF, ESI, income tax, sales tax, service tax. Have you deposited all these things within the due date? If not, how much is the arrears outstanding as on the last day? That means 31st March, this should be outstanding in the balance sheet, which is due for a period of more than 6 months from the date it became payable. So that 6 months payable becomes 30th September is the last date. So if anything is due after 30th September, it is still due on the balance sheet date. No need to report. Why? Because 6 months have not passed from the date it became payable. But if anything is payable on 30th September or before 30th September, that has to be reported here, which is undisputed. Why you didn't pay till now? Now, if it is disputed, where the statutory dues have not been deposited because of the dispute, you need to tell the amount involved and the forum where the dispute is pending right now. If you have simply made representation, it is not considered as a dispute. Okay, let us see one test your knowledge question. I told you this is important. Mark it. Discuss the reporting responsibility. On 15th of May 2023, TDS survey was carried out in the premises in accordance with the provision of Income Tax Act. The survey team pointed out certain lapses regarding non-deduction of the TDS and raised a demand of 25 lakhs on the company because they are treating them as a default. This happened when 15th of May. The company has not deposited this demand and filed an appeal against the impugned order on 1st March 2024 under the e-appeal scheme with the some Commissioner of Appeals. So what is your CARO reporting now? Are you supposed to report this? Okay. So this becomes one disputed thing. So para number 7B comes where your dues have been not deposited because of the dispute. You should tell the amount and the forum. So in the given case, what happened? There is a dispute of 25 lakhs. So it is before the JCIT appeals. Therefore, these are all the nature of disputed statutory dues. Amount and the forum has to be reported here. Comment with regard to CARO, no doubt here, very easy to figure out. Relong has got a turnover of 650. It has outstanding dues of income tax of 15 July from July 23. When inquired by the auditor, company management informed that they have filed an objection letter, not permitted, because its objection letter is more like a representation. It is not a you are filing with the dispute register, some income tax appeal and all. However, no response is received from the department. Do you have any reporting responsibility? Yes, this will go under clause number 37A because this is not an undisputed. This is due more than 6 months as on 31st March. So you have to quote now what does this para says. So you have to report disputed also. In the given case, it is an outstanding income tax liability from July. So you are required to report under clause number 7A. It is not that you have to tell the forum and all. I hope students this is also clear. And one of the question we have seen, it is quantitative. That means you need to tell the amount, not just tell that okay GST is due. How much is due on 31st March? Because when you talk about GST due, there can be two components. Due less than 6 months, more than 6 months. Balance sheet will show 50 crore. More than 6 months is only 20 crore. So you have to tell that quantify it. Okay, unrecorded transaction, small, you can ignore it. Is there any transaction not recorded in the books of account which is surrendered or disclosed as income in the tax assessments and the income tax rules? Okay, if something you are not record, see something you are trying to bring to the notice of the shareholders, that means unrecorded income you have shown there but not here in the books. That is what you need to report. Default in loan repayment, please mark it important because they can give you an examination question where you have to prepare this statement. In loan repayment, see loan given already done. Here you have taken a loan and have you defaulted in repayment of the loan? If yes, you need to tell the nature of the borrowing. So there is a long-term loan, short-term loan, name of the lender, each lender wise you have to give, amount not paid but due on the due date, whether principal amount or it was interest amount, how much delay, number of delays, and the remarks. Okay, so students, this is very important. My guess, they may give you some data and they may ask you to report it. So you have to say default is how much to the bank, how much to the institution, how much to the government, how much is payable amount, whether it is the principal portion or interest portion. So they will give you information. You have to fill this table, but they will not give you this table. They will just give you the information and say how do you report in CARE. So you have to fill this, prepare, and say number of outstanding days and any remarks. Whether company has declared a willful defaulter by any bank. Vijay Mallya is the first willful defaulter. Now, who is the willful defaulter? He is the one who has got a money but is not going to pay. The moment you put somebody as a willful defaulter, entire banking institutions are going to get closed for such borrowers. So it is a very dangerous thing. Whether term loans were applied for the purpose for which the loans were obtained, if not, where it is diverted, for which purpose it has been used. Because see, auditor knows whenever the bank, see again this is all for the interest of the bankers, lenders. Now, banker has given a loan. You told I want to construct a house. You must have been using it for some other purpose. No. How does the banker comes to know? Banker cannot appoint an auditor for you. So now, since the auditor is already there in the organization, he knows the purpose for which the loan is taken and where it has been utilized. So he has to report now whether the funds raised on the short-term basis have been utilized on a long-term purpose. This is the bankruptcy case now. Because tomorrow when the short-term creditors will come and ask money, you will not be in a position to sell the long-term assets. This type of risk, if the organization is taking, you have to tell the nature and the amount involved. Whether the company has taken any funds from any person, entity or person on account of meet the obligation of the subsidiary, associates and joint venture, you have to tell such transaction also, because you are not taking loan for you. Let them take. No, why you are taking on their behalf? Like father is taking loan for the son. Let the son only take the education loan. No, why your father is taking? Yes, if such type of instances are happening, we have to make people know about it. Whether the company has raised a loan during the year on the pledge of securities held in its subsidiary. That means father is taking the loan by keeping son's car as a pledge. Joint venture or associate, give the details. If the company has defaulted in repayment, that also has to be given. Okay, there is one example and a test your knowledge 7 question. Okay, let's see that. K Limited, one example is given, took a term loan from a nationalized bank for 200 lakhs, is 2 crore, payable in 5 installments of 40 lakhs. It paid the due on 2016-17 but defaulted in 18-19-20, 3 years. What is your responsibility assuming he has sought reschedulement of the loan? Okay, so now there is a default in the payment of the loan. So first you say you have to tell the nature of the borrowing, period and the amount of default. Also, is he declared as a willful defaulter? So in the given case, the auditor shall report in CARO, the company has defaulted and so much amount is scheduled for consequential impact. He has to evaluate the consequential impact of the audit report as well. This is what you need to tell. Now, test your knowledge 7. Under CARO, a term loan was obtained from the bank of 80 lakhs for acquiring R&D equipment. 15 lakh was used to buy the car for the director. Yes, you have got a reporting requirement under para 939C that have you whether any of the term loan applied for the purpose for which it was not obtained required. If not, the amount of loans so diverted, the auditor should examine the terms and condition, check the sanction letter, because from the sanction letter he will come to know. Okay, they may ask you how do you verify also. Please be careful in the exam question. So the sanction letter would have told what is the purpose. Compare the purpose with what actually they have utilized. Obtain evidence about the utilization. In the given case, there is a mistake, there is a problem. R&D, instead of buying R&D equipment, they have purchased a car. Auditor should report this fact in his CARO report. Okay, students. So from clause number 11, 10, we will see tomorrow because only few clauses are there. Yes, I think we can complete this chapter by tomorrow.